If you're looking to create financial projections for an e-commerce startup, then you've come to the right place. We are going to walk through our financial projection template built specifically for e-commerce and direct-to-consumer brand businesses that are selling primarily through e-commerce channels. Before I dive into the details of how to fill this out and how it works, my name is Adam Hoeksema. I'm the co-founder of Projection Hub, and over the last decade, we've helped over 50,000 entrepreneurs create financial projections for all sorts of different businesses for potential investors and lenders. And today, we're specifically focused on this e-commerce template. If you stick around to the end of the video, I'm going to give you access to a discount code that you can use to purchase this template, so you can go and grab the template if it looks like it's going to be a good fit for you. But why don't I walk you through how it works first, and you can make a decision then. Okay, so I'm starting on our at a glance or our dashboard tab here. And this is kind of once you have completed all of the projections, this is what you're going to get: a nice profit and loss at a glance over the 5-year period, some key performance indicators, things like customer acquisition cost, average order quantity, average order value, those sorts of things that are key in e-commerce businesses. Some different graphs and charts as well. You will also get a 5-year income statement summary, a 5-year cash flow summary, a 5-year balance sheet summary, and then your income statement, cash flow statement, and balance sheet all broken down by month for each of the 5 years. But in order to get all this pulled together, we have a little bit of work to do on the input side. So I'm going to show you our input assumptions tab to start with. Now here you can set things like your projection start month, your opening cash balance, any equity funding that you have received or will receive in the future. And you can just put in the dollar amount and the month in the model that you expect to receive that. You can use month zero for existing investments. Accounts payable terms. So this is the percent of operating expenses paid in the month incurred. So this would be assuming that you pay most of your bills when you incur the expense. Now, maybe some of your suppliers might give you terms. Maybe they give you 30-day terms that you place the order and you don't have to pay for 30 days. So if that's the case, you might have less than 100% here, where some of your expenses you pay later. On a 1-month delay. Accounts receivable terms, so this would be percent of sales paid upon delivery. In e-commerce businesses, typically you're going to get paid when you sell the product. You're not going to give terms to the individual customers. So I would just leave this probably at 100%. And then fixed assets, you're probably not going to have a whole lot in the way of fixed assets, maybe a trademark, maybe some employee equipment. If you do own your own warehouse or fulfillment center, then that would be different. You could put a warehouse and racking and forklifts and that sort of thing in here as fixed assets as well. And then we've got the ability to add a business loan. So we've got a $400,000 business loan in here as well. Now this table down here, this how much cash do I need? So what this is going to do is you can kind of ignore this until you're completely done with your projections, and you may want to come back to this and take a look at it. And what it's going to do is it's going to say, hey, is my starting cash sufficient based on all my startup expenses that I've entered, based on the amount of equity and loan funding that I've projected that I'll raise, and then based on the amount of time it's going to take me to break even based on the projections. Do I have enough working capital to help cover any losses until I break even? And so once you're all done, you can come take a look at this, and this will say starting cash is sufficient or not sufficient if you don't have enough cash, right? Okay, so now we're going to jump to the input revenue tab, and here is where we can enter in our visitor acquisition channel. So let's say we have a paid ad budget where you can enter in those paid advertising budget here. You can find the average cost per click for certain keywords with tools like the Google AdWords keyword planning tool. Will give you an idea of how much a certain keyword will cost per click. So you can use that to get an idea of how many visits your ad budget might drive to the website. You can also estimate the number of organic visitors that you can get to the website. So this might be from tools like Ahrefs, which allow you to see what other competitors are getting in terms of organic traffic and what kind of traffic you might be able to get over time as well. And this is usually, SEO is a long game. It takes a while to build this up. So if you're starting from scratch, I wouldn't expect too much in the way of organic traffic to start out with, and build that up over time. So this will help you forecast total number of visitors. From there, you need to have some assumption around the conversion rate of website visitor to orders. And so a 2% might be a pretty typical maybe a little bit on the low end, but it's going to be somewhere in that neighborhood of 2% for a conversion rate of website visitor to order. And then you can say how many items per order a average customer is going to purchase. And then our number of items purchased here is forecasted. Now that we know the number of items purchased, we need to build out this matrix of our different products or our product categories. And you can see here how you can fill this out. So let's say we've got product number 1 here. We're launching in month 1. But we're going to actually phase this prototype product out in month 12. We're going to stop selling it after month 12. We're going to move on to product category 2, which is going to launch in month 6 and go through month 60, so the end of the 5-year model. You can put in different price points, different costs of those products, and the cost of shipping, packaging paid by the seller here, and then the relative popularity. So this is a little bit tricky to understand, but the way you need to think about this is if you add up all the numbers that you have entered in here, so if we add those up, 1 plus 2 plus 1 plus 2, that equals 6. So what this is saying is that product category 1 is going to sell 1 out of every 6 units that are sold. Product category 2 is going to sell 2 out of every 6 units that are sold. So that's kind of the way you can think about this and fill this relative popularity section out. All right, so annual price growth, we're going to increase prices by 5% for all of our products. We expect our annual cost of those products to go up by 3%. And now here's where we can do some inventory modeling. So let's say we have a opening inventory of $10,000. We need to buy maybe minimum order quantities of 25,000, let's say. And so our first order amount is going to be 25,000, and we're going to order that in month 3. And then we're going to order every 3 months. And you can add this order buffer. And so what this order buffer means is we have a 10% buffer in there. That means you're going to order 10% more than what you actually need at the moment. And that just allows you to make sure you're not running out of inventory along the way. You can add in a minimum order amount, 25,000. Here's this example. And then the months between order and delivery. So let's say you place your order, but it's going to take 2 months for that order to be delivered. And then from a cash flow perspective, this is also really important that you'll probably have to pay some percentage up front as a deposit due when you place the order with the manufacturer, for example, and then a final payment due upon delivery. And so then this will, based on all of that, will forecast your inventory modeling here. So let's go ahead and jump over to our input other expenses tab here, and you can just input other operating expenses, right? And so things like consultants, and maybe you're developing a Shopify platform-based website, e-commerce website. And let's say you have some remote office expense that you can select here as a per FTE, so per full-time employee. You can add $500 worth of office expenses or remote office expenses. You can also add expenses that are fixed or as a percentage of revenue. So let's say we know some fixed costs that we're going to have each month, but then let's say if the business starts to work, we know in year 2 through 5, we know our general and admin, our research and development, our sales and marketing are going to be some percentage of revenue. And so we can select percentage of revenue and then put in a percentage here. And then finally, we can look at our input salaries and dividends tab, where you can input your salary positions, give them a salary, benefits, the month that position is starting and ending. So for example, we're saying our marketing lead is not going to start until month 13. General admin staff not going to start until month 15. You can also you could add customer support up here in the salary positions, but we also have this concept of a scaling staff team. So you could add customer support that would add new customer support agents to the model for every X amount in monthly revenue. So in this case, it's saying for every 100,000 in additional revenue, we're going to add additional monthly revenue. We're going to add a new customer support staff member at the $65,000 annual level. So that is really the end of the process. And so once you're done with that, you're back to where we started with your completed projections and able to present that to potential investors and lenders. Once you're all done, take a look and make sure that the business is profitable and cash flow positive. And I think the key thing is that you make sure that you have sufficient cash. So make sure that your cash balance does not dip below 0. If it does, then you're going to need to either raise more capital from investors or lenders, or reduce expenses or increase revenue or something to make sure that doesn't persist. So Hope that's been helpful. If you have any questions at all, please reach out to us. And again, as a thanks for watching to the end of the video, if you go down in the description of the video below, there's a link to our template, but there's also a link to a form that you can fill out to get a coupon discount code for this template as a thank you for watching to the end. So we appreciate it, and let us know if you have any questions at support@projectionhub.com. Thanks.